The US dollar has been the world's reserve currency for 80 years, and in that time it survived two world wars. It survived the Cold War, it survived the 2008 financial crisis, a global pandemic, and whatever the last 4 years were. But there's something happening right now that none of those things could do. It's not a war, it's not a crash, it's not a single dramatic event that makes the front page of every newspaper. It's quieter than that. And that's exactly why it's more dangerous, because the dollar isn't collapsing, it's something slower, something more permanent, and by the time the mainstream media figures out what to call it, it'll already be too late to do anything about it. So let's talk about what's actually happening, because the proof has been hiding in plain sight for years. Why the dollar became God. To understand what's happening to the dollar today, you first have to understand why it became the world's reserve currency in the first place. Because it wasn't always this way. Rewind to 1944. World War II is almost over. 44 countries send representatives to a hotel in Bretton Woods, New Hampshire. And in that hotel, they make a decision that shapes the entire financial world for the next 80 years. The deal was simple. Every currency in the world would be pegged to the US dollar, and the US dollar would be pegged to gold at $35 per ounce. America holds the gold, everyone else holds dollars, and the system works as long as everyone trusts America. Then, in 1971, Nixon broke that deal. He took the dollar off the gold standard entirely, which should have destroyed the reserve status, but it didn't, because Henry Kissinger made another deal, this time with Saudi Arabia. America would provide military protection, Saudi Arabia would price all of its oil exclusively in US dollars, and since Saudi Arabia was OPEC's biggest player, the entire oil market followed, which meant if you were any country on earth that needed oil, and every country needed oil, you needed dollars first. And just like that, the dollar didn't need gold anymore. It had something better. It had oil. And for the next 50 years, the petrodollar system made the US dollar untouchable. It created a permanent artificial demand for dollars across every economy on Earth. It allowed America to run deficits that would have bankrupted any other country. And it made the dollar the backbone of global trade, global debt, and global finance. But here's the thing about systems built on deals. They only last as long as everyone keeps their end of the bargain. The first crack appeared quietly in 2022. When Russia invaded Ukraine, the US and its allies froze $300 billion in Russian foreign currency reserves, just froze them, assets that Russia had legally accumulated over decades, gone overnight by executive decision. Now you might think, good, Russia deserved it. And maybe they did, but here's what that decision looked like to every other central bank on Earth that was holding dollars. It looked like a warning, because if America can freeze Russia's reserves, it can freeze anyone's reserves. And suddenly the dollar doesn't just look like a safe asset anymore, it looks like a political weapon. And central banks around the world took note, because in 2023, global central bank gold purchases hit their second highest level ever recorded. Countries weren't just diversifying, they were quietly moving wealth out of dollars and into something America couldn't freeze. And then the second crack appeared, because while everyone was distracted by AI and NVIDIA and whatever the Fed said at the last press conference, something was happening in global trade that the financial media almost completely ignored. Countries started settling trades in currencies other than the dollar. China and Russia began trading in yuan and rubles. India started buying Russian oil in rupees. Brazil and China began exploring direct currency swaps. Saudi Arabia, the same Saudi Arabia that built the petrodollar system with Kissinger, started openly discussing accepting yuan for oil payments. Let that sink in for a second. The country whose deal with America created dollar dominance is now entertaining the idea of pricing oil in a different currency. This isn't a conspiracy theory. This is just reading the financial news that doesn't get covered on CNBC because it's not exciting enough for a chyron. The data, the actual proof. Now, here's where I stop telling you what's happening and show you the numbers, because this is the part mainstream media conveniently skips. In 2001, the US dollar made up 73% of global foreign exchange reserves.
Today, that number is 58%. Now, 58% still sounds dominant, and it is for now, but that's a 15 percentage point decline in 2 decades, and the direction of travel matters more than the current number. Because this isn't a cliff, it's a slope, and we're on it. And it's not just reserve holdings, because SWIFT, the messaging system that processes most international payments, used to be almost entirely dollar-denominated. But the dollar share of SWIFT transactions has been declining steadily, and more importantly, alternatives are being built. China launched its own international payment system called SIPS. Russia built SPFS after getting cut off from SWIFT. And the BRICS nations, Brazil, Russia, India, China, South Africa, and now several others, have been actively discussing a new reserve currency or payment system entirely. Now, to be fair, none of these alternatives are anywhere close to replacing the dollar yet. SIPS processes a fraction of what SWIFT does. The BRICS currency idea is still more of a geopolitical talking point than an actual financial instrument. But here's what's important. 10 years ago, nobody was even having this conversation seriously. And the dollar's decline isn't happening because one country decided to stop using it. It's happening because dozens of countries are each making small, rational decisions to reduce their exposure to a currency that has become a political tool. And death by 1,000 cuts is still death. So what does this mean for you? Okay, so central banks are diversifying, countries are settling trades in other currencies, dollar share of reserves is declining. Why should you care? Because dollar dominance isn't just an abstract geopolitical concept. It has a direct, measurable impact on your daily life, and most people have no idea. Here's how it works. Because the dollar is the world's reserve currency, there is permanent artificial demand for it. Countries need dollars, companies need dollars to settle international trade, and that demand props up the dollar's value above what it would naturally be worth, based on America's economic fundamentals alone. Which means Americans have been living with artificially cheap imports for decades. Your iPhone, your clothes, your furniture, your oil, all cheaper than they would be in a world where the dollar wasn't the reserve currency. It also means the U.S. government has been able to borrow at artificially low rates because there's always a buyer for U.S. treasuries somewhere in the world. And it means America has been able to run trillion-dollar deficits without the kind of currency crisis that would have destroyed any other country. Now, imagine that artificial demand starts to shrink. The dollar weakens relative to other currencies. Imports get more expensive. Inflation structurally embeds itself into the cost of living. Borrowing costs for the U.S. government rise, and the deficits that were manageable suddenly become very difficult to finance. This isn't speculation. This is just basic supply and demand applied to a currency. And it's already starting, because if you've been wondering why inflation feels stickier than it should, why prices haven't come back down even after rate hikes, why the cost of living keeps drifting higher even in a so-called soft landing, part of the answer is this: the tailwind that made everything artificially cheap is fading. So is the dollar dying? Not today, probably not tomorrow, but the system that made it dominant, the petrodollar, the unquestioned trust, the lack of alternatives, that system is eroding, quietly, slowly, and almost completely out of sight of mainstream financial media. Because here's the thing about slow-moving crises: they're always obvious in hindsight and almost invisible in real time. The dollar's reserve status didn't appear overnight. It was built over decades through war, diplomacy, and financial architecture that most people never think about. And it won't disappear overnight either. But the direction is clear, the data is there, and the question isn't really whether dollar dominance is declining. The question is how fast, and whether you're paying attention before everyone else is forced to. Because by the time this becomes a mainstream headline, the early moves will already have been made. And that's exactly why I made this channel. So if you're tired of being handed the simplified version of what's happening to your money, hit subscribe, because this is the stuff that actually matters. The slow, structural shifts that don't trend on Twitter, but determine what your savings are worth in 10 years. The real risks are never the loud ones. They're the quiet ones.